Hello, traders. Mark Pre-Markets here. My name is Mark Principato, and I'm a chartered market technician. And thank you for watching another Bitcoin video analysis here for TradingView. So in this session, I'm going to talk about Bitcoin, what we're looking for exactly to send out a new swing trade long signal, and why we're still bullish in light of this range bound situation that we've been looking at for a number of weeks here. Okay, so with that being said, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, this range, okay, this basically 10,400 to this 8,500 area, that's the range. And this range, this consolidation, is a higher low relative to the entire structure. Now, people need to understand something. If you look at my previous analysis and reports that I've written for some time, you'll notice most of them are bullish. Now, am I bullish because I'm just trying to fulfill my opinion and be right? Or am I bullish because the price structure tells me to be bullish? It's because the price structure tells me. You have to understand, I follow price structure, price action, and order flow. And when that information tells me what the market intention is, that's what I'm looking to align with. I want to align with the probabilities, not against. Okay. Keep in mind, we're operating a swing trade long strategy. So I'm only interested in environments that support that strategy. Now, going back to the 3,800 low, we have nothing but higher lows and higher highs. Okay. That's the structure that's relevant. The two key levels are 76.95 and this 8,500 area. As long as those levels stay intact, this market is bullish. When these levels are compromised, okay, especially the 76.95 key support, then my outlook will change. But until then, I have to go with the probabilities of the market. Now, what are we looking for in order to send out a new buy signal? Well, for those that have been following me for a while as well, they know that we like pin bars a lot, right? That's an adequate setup. We have a pin bar for this candle here, which was, Friday's candle, gave us a nice pin bar. But as you can see, Saturday's candle took out that high slightly. Now, just because there's a pin bar, and we had a pin bar back here too, just because there's a pin bar, that's not enough to take a long position or justify risk. The other thing we have to consider is the general location of this potential buy signal, which is the middle of the range, also closer to the higher part of this resistance. Like you have this resistance zone up here, and price is sort of flirting with that, okay? Which can be taken as a sign of strength. But again, when you're buying something or even selling something in the middle of a range, that's probably the worst location in terms of probability and reward risk, okay, for the strategy that we're working with. So the more ideal locations, of course, would be the 8,500 or 76.95. If price were to test one of those levels, you better believe there'll be a lot of hype and there'll be a lot of overreactive noise out there claiming that Bitcoin is going to go to 3,500 and all this other stuff again. You can't be distracted by that, okay? That's all emotional reaction. We're only interested in levels, probabilities, order flow, and price action. Now, just because we're not at the best location and we don't have the best risk reward, it doesn't mean that we don't have to avoid the trade altogether. All right. We are still betting in line with the overall structure, which is bullish. So we will give more credibility to buy signals in that type of scenario. So where I was going with that pin bar. So we have the pin bar, and I was saying it's not adequate. It's adequate, but it's not good enough to just jump in and buy. So how do we buy this thing? Well, what we do is we use a buy stop when we send out the order, which means we pick our prices in advance. We don't react. We take ourselves out of the market, out of the equation as much as we possibly can so that we're not affected by the emotional tendencies that are involved when you're trying to take a position. I mean, that's just human nature. So what we typically do is we put the buy stop away in an area somewhere that makes the market work to get us into the trade. Okay. Just to give you an example, a previous trade that we sent out based on this pin bar here, the buy order was at like 96.25. All right. As you can see, the high of this candle is 95.96. the order never activated, which kept us out of this noise. And that technique works very well because it also filters out a lot of would-be stop-outs. So again, we set our orders in advance, and most likely tomorrow we will be looking to send out a signal somewhere in those low 96s again with a preset stop and preset targets. Because again, we're betting on the bigger picture and the structure still says bullish. Okay, so I just wanted to leave you with that. If you have any questions, please feel free to share them in the comment section and I'll try my best to answer them. Other than that, I want to thank you again for watching. My name is Mark Principato, Mark P Markets. Thank you. Hello.